Welcome to the channel. I am James, and today we are looking at BP PLC, ticker symbol BP, and they have just had their earnings today, and we're going to be going through those numbers right now. The market has reacted very favorably to them, up almost 8% on the day to $31.16 a share. So what I'm going to be doing is talking a little bit more about that, going through these updated numbers, seeing what's happened with BP. Then we're going to be putting these updated numbers in my discount-free cash flow model and my Buffer Graham intrinsic value model to see what the fair value is of BP based on these and whether or not you should buy it. So what has happened? Well, you can see it's up 8% on the day. If we go to the year to the date, it's up 13%, and on the year, it's actually up 21%. A very different story to the S&P 500. Let's just bring it up as a comparison. If we go over the last year to the date, BP has beaten the market 13% compared to -12 for the S&P 500. Over the last year, the market, as we all know, is flat, whereas BP has gone up around 21%, so massively beating the market. If we look at the all-time, it's always quite interesting. BP is actually losing out. It was winning for a long time, and then pretty much the COVID crash stopped it. But if we look at the last 5 years, obviously the S&P 500, 74% to a -11. But this is the interesting thing about BP. They were previously at around $36, $38 a share pre-pandemic. What does that mean? Well, you've got anywhere between a 13 and 20% gain that can be made. So is this worth buying? Can you please give it a like on the video? Really helps me out. Subscribe if you're not already, because there's going to be plenty of stocks I'm going to be reviewing. So let's get straight into the numbers. We have the first quarter of 21 on the right, the fourth quarter of 21, the previous quarter, and then we have the first quarter of 2022, which is obviously the most latest numbers. So what is happening with revenue? Well, revenue has gone from 36 billion in the prior year to 52.2 and is now at 51. So yes, down from the fourth quarter, but comparing to the first quarter of 2021, this is up massively. So that is excellent to see. Next, well, actually, before we go into that, let's have a look at Yahoo Finance. This is the revenue numbers here. BP's revenue has been decreasing and was at a low at the pandemic, 157 billion. So 298, 278, 180. 157, and the trailing 12 months have not been updated. That's why I'm here. I'm going to give you the latest trailing 12 months number based on these. 174.4 billion. So up from the pandemic year and almost touching the end of the previous pandemic year. So it's definitely trending in the right direction. Forgetting the pandemic year is now 2 years now. How time flies. Right. Next, we're going to be looking at the profit and loss. First quarter 21, 7.2 billion. That was then 4.7, and it's now down to -16.8 billion. So overall, what is the profit and loss for the period? 4.9, 2.8, and 20 billion in the negative. So the reason for this, you can see that in the sort of expenses here, net impairment and losses of sale of business and fixed asset, 26 billion. Normally this is a little bit in the green. Sorry, not a little bit in the green, almost flat. 300 million, 1.2 billion, now 26. So this goes to note 4. Let's just have a look at note 4 and see what it says. Talks a lot about the losses. First quarter losses, 26 billion. And where does this main come from? Well, the largest part of this was the net impairment charge of 13.4 billion. And fixed assets of 11 billion. This is due to the BP's investment in Rosneft, which is note 2. What is Rosneft, you asked? Well, let's just see. BP's they do it. Yes. Well, what is because of this? It is due to the military action in Ukraine. They exited their 20% stake of Rosneft oil, and as said before, this has basically caused a impairment charge of 13.5 billion and losses going on above that. So that is the big reason for the quarter losses here, which is probably why the market still is reacting pretty favorably to it, even though they are negative in the quarter. But if we take off that, 14 billion, the profit and losses are looking a lot better. Next, we want to be looking at the oh, actually, sorry, one more thing. If we go to here, what were they previously? Well, we've got the net income here, 9.3 for 20 in the red, 7.5 billion, and now we're at about -17 billion. So not as bad as the initial pandemic year, but obviously we've lost the rebound. So it'd probably be a couple of billion in the red if it wasn't for the war in Ukraine, which has obviously had different effects as well. It's not as easy to say that, but you can see how their entire thing took a hit. And in fact, if you look at oil stocks on the whole, things are going pretty up. Shell, Exxon, Chevron, Occidental, all up quite a few percentage, but BP leading the way with almost, well, they got 8%. Good for them. Next, we want to be seeing if BP are buying back their shares. We obviously did see at the start of the, well, we didn't actually because I didn't show it, but basically BP are doing a share buyback program around about 2.5 billion. And what do we want to see? Why are they buying back shares? Because it rewards a shareholder. BP previously had about 3.3 billion shares. They now have 3,252. There'll probably be a comma in there. I hope that wasn't too loud. Yep, you can see they've got the adjusted shares equivalent and they are buying back their shares. Why? Well, because if you have 10 shares of a company and there's 100 shares, then you own 10% of the company. If the company buys back 50 shares, you still have your 10 shares, but you now own 20%. So overall, this is good for investors that BP are buying back their shares. It means two things. They think the shares are currently undervalued because they're buying them back at a fairer price, and also they then think that they can use this capital and then they can reward shareholders. So next we're going to be looking at the free cash flow. This is operating cash flow. How do we get that? Well, operating activities minus capital expenditures. BP have it all here. Operating activity 6.1, 6.1 and 8.2. So operating activity is up. Capital expenditures are actually down 3.7 billion, 3.6 and 2.9. So what does that mean overall for free cash flow? Well, BP currently has a free cash flow based on these numbers of around about 14.9 billion. And if we go to Yahoo Finance and see what that means in sort of the grand scheme of things, free cash flow has been increasing. 6.1, 10, negative in 2020. That was a pretty crazy time. 12 again, and now 14. So free cash flow is still increasing despite obviously the trouble that BP is having. So let's go to the discounted free cash flow statement. Calculate the future free cash flows of BP. We'll talk about this in a second because you can see these numbers are a bit lower. But what does that mean for BP's valuation right now? It's saying it's undervalued, $41 a share, which means it's a 33% discount. Now this is including sort of averages based on these. Now the numbers are all over the place. You can see the free cash flow to net income ratio positive 200%, pretty much flat, 1.0%, sorry, then 168%, then minus 85%. So all of these numbers are all over the place. So if we were to take kind of more reasonable years and sort of look at the fact that BP's cash flow is always increasing, let's just increase this number here so it does increase to about, say, 16 billion if we can get that. That's actually quite a large percentage. Fine, we'll do 15.8 billion. That would give the stock a $90 value, and this is with free cash flow being relatively flat. So it is hard to value using discounted free cash flow based on these, but it does show that the stock is still undervalued even with free cash flow being at 7 billion or what it originally estimated. Now, if we look at the next thing, the Buffett Graham intrinsic value, expected growth rate, earnings per share, and bond yield. Expected growth rate is negative, so we're not going to see a good number here. Yes, $10 a share, because analysts say this is going to grow at about minus 2% over the next 5 years. Now, yes, this is difficult to use, but if we were to say BP, fine, let's say they were to grow at 1% over the next 5 years, it would be $24. If they grow at 2%, $29. If they grow 3%, it's now a buy. The last 5 years, if we go back to Yahoo Finance, because if we look at the analysis here, BP previously grew at about 17% and oil was dying then. Now it's 2. So let's just say BP was able to grow at about 17%. Now, a bit on the high side. See, it's a $100 stock. It just shows that it's very interesting to see and hard to value based on these stocks. Interestingly enough, if they do grow at 17%, very similar numbers here. So could it be an next $100 stock? Maybe, but I highly doubt it. But it does show it doesn't have to have that much growth for it to be valued fairly again. Haven't been doing this last time. What did TipRanks say? TipRanks says it's a moderate buy, 8 ratings, 5 buying, 2 holding, 1 selling, $38. 16% on the upside, highs of 43, lows of 29. So overall in the next 12 months, TipRanks is saying at the very least it's going to be flat and you're getting paid a nice 4.25% dividend for your trouble. So it does look like a buy according to the analysts and the models. Right guys, thanks for watching. Please give a like on the video. I'm probably going to be bringing out another video this evening with the AMD releases, AMD earnings. And I believe there's also some nice Airbnb as well, but I'll probably be just doing one of those videos. Give a comment down below if you have a particular favorite. But yeah, I just thought this was quite interesting. So right guys, thanks for watching. Please give a like if you enjoyed it, and I'll catch you guys next time.